Get Rich Education is brought to you by Norada Real Estate, Corporate Direct, and Mid-South Home Buyers.
Garrett Sutton here, Robert Kiyosaki's asset protection attorney and the author of Loopholes of Real Estate. As an American or foreign-based investor in U.S. real estate, you know we are a litigious society. You know that you need to protect your real estate and paper asset holdings with the right mix of LLCs and corporations. My firm, Corporate Direct, not only forms these entities, but importantly, we properly maintain them too. If you fail to follow the corporate formalities, you can lose it all in an instant. Corporate Direct is your source for LLC protection and maintenance in all 50 states. Visit corporatedirect.com or call 800-600-1760. Mention Get Rich Education for a free bonus. Switch your resident agent service to us and receive another bonus. It's all good. We look forward to assisting you at corporatedirect.com.
Welcome to Get Rich Education with Keith Weinhold, giving you information and ideas on the investment that has turned more ordinary people into millionaires and billionaires than anything else, and can provide you with more wealth and happiness than you ever thought possible. Now, here's your host, investor, entrepreneur, business owner, and educator, Keith Weinhold.
Welcome to Get Rich Education. You are inside GRE. Here we go. Episode number 95. I'm your host, Keith Weinhold, and I'm back for another week because I've got that drive to help you build your wealth. Today, we've got a special kind of show because you're going to hear me chat with one of GRE's two business developers. Yes, he's on the show with me today. In fact, he's with me for the first time ever. And yes, he's with me right here in the studio alongside me today for an in-person chat. We're going to talk about opportunities today. And, you know, most people are financially poor today. And it's not so much that they don't have opportunity. It's often poor people don't recognize opportunity and poor people don't create opportunity for themselves. And there's a giant subset of people, especially in the United States, that actually have myriad opportunity but don't take action. Well, when that happens, that person is poor and they've chosen to stay poor. Well, POOR is an acronym. It stands for Passing Over Opportunity Repeatedly. Yep, P.O.O.R. Passing Over Opportunity Repeatedly. Oftentimes, it's a mindset thing. It's a poor mindset. With the mindset, just look at Napoleon Hill's classic book, Think and Grow Rich. That was a paradigm shifter for readers, okay? The name of the book is Think and Grow Rich. The word think is in the title for a reason. It's not work and grow rich or mindlessly grind and grow rich. All right, think and grow rich. This begins with a different way of thinking. Now, you've heard me have one of my business developers, John Collins, here on the show with me for our 1-year anniversary episode a while back. John lives here in my same hometown of Anchorage. Today's guest is GRE's other developer, Marcus Whelan. At times, you've heard me sign off at the end of shows with John's name and Marcus's name. Marcus is a citizen of Australia, and he and his wife travel frequently. He's here today as he's visiting Anchorage for a couple months. It's important for me to have an international investor and entrepreneur on my team close to me to give me perspective in this increasingly global world. Marcus and I exchange a lot of ideas. Most people, they sort of think, since we're talking about thinking here, they think in a local and linear fashion. I like to think in a global and exponential way rather than local and linear. Global and exponential. It's a global and exponential world now. Marcus is very intelligent, and he's also just really savvy, and he's a well-connected guy, and he helps me think in that global and exponential way, and you're going to see what I mean today. Now, I started investing in real estate myself in 2002 when I made my first ever home, a fourplex building where I lived in one unit and rented out the other three. I didn't have much money. I scraped together for that 3.5% down payment, which is an incredible opportunity again, an incredible opportunity in itself to put a 3.5% down payment on a building. And that's still available to you today in the United States, by the way. Well, I didn't have much money in 2002, but rather than staying poor, P.O.O.R, passing over opportunity repeatedly, I chose to make and take opportunities repeatedly. And I'm here every week to encourage you to do the same because I know that I can create wealth for you, which is an opportunity that I won't pass over. That's the opportunity for me to make a difference in your life. After buying the fourplex and using almost none of my own additional money, instead I used cash out refinances and 1031 exchanges. Just let the equity do the work for me. With cash out refinances and 1031 exchanges, I used that to grow nationally and internationally into income property, apartment buildings, single family homes, even some cash flowing agricultural real estate, which I've talked about here on the show, and more. Later, I would go on to become an investing educator. I love this stuff. It energizes me. And I launched this show in October of 2014 in order to reach more people. Today, I am also a contributing writer to Robert Kiyosaki's Rich Dad Advisors blog. That's kind of a fresh distinction for me, only a few weeks old. So I'm barely a seasoned writer over there. And I am truly honored again for another opportunity, which is what that is. Now, I'm based in the United States, born and raised in Pennsylvania, which is in the eastern U.S., and I chose to move here to Anchorage, Alaska. And look, I would like to think that I don't believe that the U.S. real estate market is best just because I happen to live in the U.S. I've briefly told you about my real estate tours in the Philippines and Central America and elsewhere. Much of Europe has rent-to-value ratios that don't make sense for cash-flowing investors either. The United States produces rent-to-value ratios on property that create cash flow with small down payments. There's a rule of law. See, here in the U.S., if an employee is not wealthy enough to afford a home, they have a job with an income that's still good enough to reliably make a rent payment. In the U.S., real estate typically appreciates over time as well, and it often gives fantastic tax breaks when you provide housing for others. If housing stumbles, the U.S. government props up housing with subsidies and credits and other tax breaks. It was around 2009 when housing values dropped that President Obama even gave away that $8,000 first-time homebuyer tax credit. The financing is so great in the United States, 20 to 25% down payments for small income properties that you don't even intend to live in. And they'll let you stretch out that loan for 30 years. Not just 30 years, but 30 years fixed and amortizing and at a low interest rate and typically with tax-deductible interest. Some of the other countries in the world that do have 30-year loans, they make your interest rate adjust every 5 years or so. At GRE, we invest predominantly for cash flow, monthly income, not so much capital gains. That's why we're investing, not merely speculating. Now, I'm staying open-minded. If you live in a place in the world that matches up with the U.S. for real estate investing, contact us at GetRichEducation.com and let us know. Link me to some data. If it's compelling enough, I'll make a trip there, and I might even do a show from there. I love the travel. I've done this show from other countries before. One of my degrees is in geography, in fact. I like that kind of thing. When you look globally at where to invest, you often want a larger population for stability, a growing population for demand, and a growing economy. Let's just measure economically using gross domestic product here, okay? The GDP, which is the market value of all the final goods and services from a nation in a given year. These are the world's largest economies today, according to the International Monetary Fund. This is interesting. Let's look at this. The number one economy is the United States with a GDP of $18 trillion. Number two is China at $11 trillion. And by the way, I'm just rounding off to the nearest trillion here. So yeah, one rounding error, that's like enough to give you financial freedom many times over. Number one's the U.S., number two is China, number three is Japan at $4 trillion. So we've already stepped down. U.S. at 18, China at 11, Japan at 4. Number 4 is Germany at 3 trillion plus, and number 5 is the United Kingdom at almost 3 trillion. And then rounding out the top 10 are France, India, Italy, Brazil, and then Canada is in 10th. Interestingly, if you combine the GDP of every country in the European Union, all of their combined GDPs, all of them together, are $16 trillion. Again, the U.S. by itself is $18 trillion. I'll link you to that table in the show notes so that you can look at it more closely if you like. Now, interestingly, as far as Get Rich Education's listener base, GRE's third largest listenership after the U.S., and then second is Canada. Third largest is Australia, the home of today's guest, okay? Now, although I like U.S. real estate, there are advantages to not having absolutely every hard asset of yours invested in the greatest debtor nation in the history of the world, which is just what the United States is. That's why I do direct own real estate in multiple foreign nations, but I merely focus on the U.S. We're going to discuss why the United States real estate market is special with GRE's business developer, Australian Marcus Whelan. But first, another word about being poor, P.O.O.R, passing over opportunity repeatedly. Actionable opportunity is the best type of opportunity. Our terrific sponsors are carefully chosen, okay? They bring you that specific, concrete, actionable opportunity. Rich Dad Advisor Garrett Sutton helping you protect what you've got there at corporatedirect.com. And those who specialize in providing that cash-flowing U.S. real estate, our friends at Mid-South Homebuyers and Norada Real Estate. So here you go. I'll be right back. This is Get Rich Education. Cash flow real estate investors nationwide and worldwide, this is Get Rich Education's Keith Weinhold. Forbes has rated Memphis, Tennessee as the #1 cash flowing market in the world. Our good friends at Mid-South Homebuyers have been Memphis's premier turnkey real estate provider for 14 years with a stellar reputation and an A+ rating with the Better Business Bureau. Owner Terry Kerr was born and raised in Memphis. Yeah, he knows the market and has renovated and sold over 1,000 houses in the Memphis area. Find out what their many repeat buyers already know. Their houses are completely renovated, even come with a 1-year builder's warranty and a lifelong rental guarantee. They're a perfect fit for the first-time out-of-state investor or the seasoned investor diversifying their portfolio. Mid-South Homebuyers' friendly staff makes investing easy. Learn more at midsouthhomebuyers.com or give them a call at 901-217-HOME.
Are you having a hard time finding great investment properties? Unfortunately, the best deals are rarely found locally. Successful investing begins with the right properties in the right markets. Norada Real Estate provides everything you need to invest in the best deals across the U.S. Our simple, proven system will help you create real wealth and passive monthly cash flow. Get your free copy of the ultimate guide to passive real estate investing at noradarealestate.com/guide. That's NORADA realestate.com/guide.
This is Rich Dad Advisor Tom Wheelwright. Listen to Get Rich Education with Keith Weinhold and don't quit your daydream.
Well, today it's a pleasure for me to invite one of my friends onto the show, international real estate investor and entrepreneur from Australia, Marcus Whelan.
Hey, Keith, it's good to be here.
Yeah, so Marcus is literally here. He's here in Anchorage with me. And interestingly, Marcus and I met through a mutual friend, and that mutual friend is Get Rich Education's business developer, John Collins, because a few years ago on the 2012 Real Estate Guys Investor Summit of C, John Collins and Marcus Whelan met there. So, Marcus, I found it so interesting listening to you tell us about the Australian real estate market because you're from Australia. You've lived most of your life there. You travel around and look at other international real estate markets. So I just find your perspective from the inside really interesting. So tell us a bit about the Australian real estate market, especially as it pertains to income property.
Yeah, that's right. In Australia, a lot of people will buy for capital appreciation, and that kind of never really fitted my investment philosophy. I always like to invest for cash flow. Whether the market goes up, down, or sideways, I don't particularly care. I just want an income. Capital appreciation on top of that's just bonus for me. But in Australia, a lot of people will buy for capital appreciation. The house might go up in value, sort of 10% per year. They'll cash out, refinance, buy another house. But all along, they've got a negative cash flow position where they've got to prop up that shortfall with their paycheck or, with part of their salary, which is usually quite a substantial amount of it too.
So rather than the property producing income and that's supplementing someone's day job, it sounds like in Australia, people are actually hemorrhaging their day job income just to go ahead and prop up something because they're so, well, I guess almost dependent, maybe even to the point where they feel expecting of a capital gain. So they can just go ahead and cash out and move it on.
Yeah, that's right. And everyone has a different, investment philosophy. It just doesn't, I'm not saying it's right or wrong. It just doesn't fit what I like to do. I see real estate as a business, and I'm in that business to make a profit. I'm not in business to lose money and then try and pull that money from somewhere to prop it up. So I don't like to investing for capital appreciation. I see it as speculation. I almost see it as gambling, and I don't like to gamble. I like to bet on things that work, or I know I'm going to get a return. And if it goes up in value, that's great. I don't particularly care. I've just never been able to really find any good income producing properties in Australia unless they're sort of very large multi-units.
Yeah, exactly. I mean, why gamble when you can invest? Now, Australian real estate, just tell us about the appreciation rates over the last few years. And, I want to preface that with, I know that like in 2008, when a lot of the world, including the United States, felt pain, Australia didn't even feel pain then. In 2008, the market went about sideways in regards to price and valuation of property. What has it done since then on a year-over-year basis? And of course, Australia is an entire country. It has its own distinct local real estate markets, of course. But on the whole, what's the appreciation been like?
Yeah, even back since, I'd say the run-up has started, say, late 94, 95. The market's been in a continuous sort of bull market since. And in 2008, prices did drop sort of half in some markets in the US. In Australia, it sort of went sideways for 18 months and then it continued up again. But it's been regularly sort of ticking over double-digit growth in a lot of the markets, Sydney, Melbourne, Perth, pretty much all the major cities, it's been double-digit growth. Sydney particularly has just really kicked on a lot. And yeah, it's been hard to get any return on your cash. Let's say that much.
And we're talking appreciation of like 10 to 20% per year, every year, 4 years, right?
Yeah, 4 years for a long time, particularly 2008, with the stimulus packages as well. In Australia, they gave handouts to everybody, $1,000 in cash, and people went and spent that. There's a lot of different factors which have pushed the price up. Chinese buyers also have come into the market just trying to put their money somewhere safe where it's not in a home country. They're just trying to preserve wealth. And I think with those sort of buyers willing to pay 30, 40% more than the actual market price, I think that's really lifted prices a lot as well.
Yeah, a lot of the Chinese want to get their money out of China and put it in the United States, and it's no different with what they're doing there in Australia. Now, a lot of times we like to use the past to go ahead and predict what the future might be. So in 2007, 2008, 2009, what led to the mortgage meltdown and a big erosion in prices in the United States was because there were irresponsible lending practices, and that caught up with the entire market. That spread to everybody. Do you have any idea? Do you think there are loans being made to irresponsible people that don't have good credit scores and don't have adequate balance sheets in credit over there in Australia? Is that part of that? Is that contributing to this run-up?
Yeah, I think so. Since 2008, I think a lot of loans were made where it was almost a nothing down deal, where especially with the first homeowners grant, where the government was giving away grants, say $7,000 or $14,000 to build a house. Of course, that increased it as well. Yeah, so there's a few factors that caused it.
Yeah. Now, what about some of these other factors? You talk about how people are buying for appreciation, not cash flow. And again, we're talking about an entire country here, Australia. I know it has a significantly smaller population than the United States, but still, just like for a rent-to-value ratio, how we look for 1% here, typically in the United States, Midwest and South, what can you expect to get in Australia?
I think you'd be happy just to get 0.5%.
Right.
I'm not kidding. Even 0.25% is not crazy either. to be honest, it's a great place to rent. I have no issues in renting in Australia, and that's why I love to invest in the US and other markets where I can get cash flow, I can get income, I can even get capital appreciation. Whereas in Australia, there really is sort of one exit when you're buying the real estate there. You're just hoping for it to go up in value and exit at a later date, or cash out, refinance, and buy another property. And it's fantastic when the market's on its way up. When it's on its way down, I think that's when it's going to catch out a lot of people. So recently, traveling around Australia a little bit in the last few months, I did talk to older people, retirees that have actually sold their whole real estate portfolio. I mean, everything, even their home, and then traveling around in sort of caravans and RVs and that kind of thing, because they're aware that how much prices have gone up, and they know that it can't continue forever at this rate.
Sounds like a game of musical chairs, and you want to sell your property before the music stops. What are interest rates like in Australia, and what are loan durations like? 30-year loans, 15-year loans, 10-year loans? How does that look?
Yeah, 30-year loans, interest rates about government rates. Central bank would be 1.5%, 1.25%, and probably around 5% you'd get. The retail rate from the bank would be about that much, yeah.
Yeah, well, your wife's from Japan, and you've had the opportunity to spend a fair bit of time in Japan as well. Why don't you go ahead and describe their real estate market to us, where you do have this demographic slide like Harry Dent was telling us about a few months ago?
Yeah, it's a really interesting demographic. They have 127 million people at the moment. I think by 2050, that could be under 100 million. So,
wow.
Yeah, it's incredible. You're really seeing there's a lot of older people. There's very young people that can take on the burden of that government debt. And you've got a lot of houses that just sit empty. And Japan's kind of an interesting thing where people like new things or new products. As soon as you buy something new, it just depreciates in value. And I was looking at a couple of deals 2 months ago. This is 2016, buying in one of the major sort of centers there. And when we went through the numbers, everything's on a downward slope. The value of the property or rents are all decreasing. And I was asking different investors, different developers, and that's normal. So when you invest in Japan, you just got to assume that prices are going to go down and rents are going to go down. And when we went through the numbers, I just couldn't believe it, that I was like, well, I actually like to invest in the US where prices go up and rents go up. And they just really couldn't believe that. So you've got to have some big buffers there if you're going to invest on those numbers. And of course, location is completely key, because if you're not really in a perfect location, you're just going to get even more depreciation in the value of the property. So pretty much every day it's ticking down, because another new product will come on the market and then that'll bump the other one down. And it's just a constant sort of recycle of new product. So it's quite an interesting dynamic for their market.
Yeah. So while in Australia, you can expect appreciation, whether it's sustainable or whether there's a basis for it or not, in Japan, when you buy, you're actually expecting depreciation, a loss in value of the property, and a loss in rents. I mean, if demographics tell the story, if Japan's going from a population of 127 million today down to 100 million over the next 30 years or so, I mean, that just tells you a lot about occupancy and how many homes are going to be vacant. And you just don't have economics 101, a supply-demand dynamic right there that's going to be positive for appreciation at all.
Yeah, I think so. And one of the reasons I looked at that market is because there was cash flow there. The deals actually did cash flow. Okay. It's just they were diminishing year on year. And so looking at the exit, it seemed like a bit cramped because, okay, the building's decreased in value, my yields are dropping. So it's like, where do I exit? How's that going to look? If I make a mistake, can I get out of it by just holding the property long term, which I couldn't? There's just too many factors against it. But initially, there is cash flow there. So obviously, you don't buy and hold for appreciation. There is cash flow there. You've got to pretty much build a new product, depreciate that off as an expense, and then hold it sort of for 10 years, pull it down and do it all again and get perhaps a 7% sort of return on your cash.
Right. So at least you can get cash flow in Japan, but to expect depreciation, I mean, that's just kind of a foreign phrase to United States real estate investors. You know, we use the word depreciation in conjunction with a tax benefit that we get, such that the short story is that we're not paying tax on our entire rent income. And that's one of the depreciation benefits that we get. So in Japan, tell me a little bit about interest rates and loan terms there.
Yeah, they're interesting. I have friends that have managed to get 0.5% from the banks. So banks are really, I'd say since the Tokyo got the Olympics, now banks are lending everything and you can shop around. The retail rates are about 1.5%. For a normal homeowner, more like 2%. For a business owner, you can get them around 1%. And if you shop around 0.5%, so it's pretty much free money. You're crazy not to borrow it. But then when you look at it, you're looking at the depreciation and loss of yield. I don't know if it's good to be in that position. And then once the Olympics are finished, what's going to happen then? Yeah, I think Japan's really trying to throw everything they can at the economy just to get it over the line until the Olympics, and then whatever happens, happens. But I don't know if they're going to default or how they're going to deal with their debt situation, but it doesn't look good to me personally.
Yeah, so that was mortgage interest rates for a Japanese citizen at 2% or less.
Correct, yes.
Yeah, that's incredible. But because they're experiencing deflation there, that's a little bit backwards. Tell us about how that works, when you have deflation and yet you're still paying an interest rate.
Well, an interesting thing these days is because, now they've gone negative interest rates. So people have even pulled their money. It costs you to have your money in the bank. Can you believe that? Like it costs you to keep your money in the bank. So people are pulling it out, putting it in gold. They're even keeping it in cash. And apparently the sales for safes, home safes at the moment to keep all this money have been booming because people just want to pull that cash out of the bank and store it because at least it's free to store it at home, whereas it isn't in the bank. And you wonder how banks are staying capitalized when people are pulling money out of the bank. And I guess the central bank's just propping them up at the moment.
Yeah, I've read that safes are a hot seller in Japan, so that way it's not being held at the bank where with a negative interest rate, you would need to pay the bank for them to hold your money for you. As long as you keep your money at home in a safe, as long as it is safe in that safe, that could potentially be a better place for it because in a deflationary environment, those dollars or yen in this case are actually worth more as time goes on.
Exactly, yeah.
So you're an international real estate investor, and I think what you've learned, what a lot of people in the United States may not realize, is that globally, the United States is just a really special real estate market.
Yeah, not just for real estate, but I mean for opportunity. It's the land of opportunity. It's been like that in the last century, and I think it'll be like that this century. There's opportunities here galore. It's incredible. And yeah, you can get cash flow in the US. I mean, you can sort of trip over yourself and get a 1% rent ratio. It's still the number one economy in the world by far, by the way. It's an English-speaking country. There's great tax breaks for owning real estate here. The population's increasing. Rules, laws, regulations are very similar to my home country, so it makes it quite easy to invest here. So yeah, I love investing in the US. It's awesome.
Yeah, and most American citizens don't even know that perhaps the best investment of them all out there is investing in a lot of these single-family homes in the Midwest and South that have these 1% rent-to-value ratios where you do expect some appreciation, where you do have great availability of loans with low long-term fixed interest rate debt, and you do have that cash flow paying you every month. So you're cognizant enough to realize that because you're a world traveler, a frequent traveler, and an investor. But yet, of course, you often cannot get loans as a foreigner. So, I mean, what are some of the ways that you found to invest in the U.S. real estate market without being able to get loans?
Yeah, I guess that's probably the hardest thing investing overseas is getting loans. I mean, I can get a loan, but the LTV isn't so favorable. I'd pretty much have to put down a 50% deposit on the property.
Yeah.
So it's really only two ways around it, and that would be seller financing, where I can find someone looking to exit their property. Maybe they're a baby boomer or someone that's looking to retire that I can partner with and take over their property and pay them back slowly. So basically that property owner is the bank for me, and we can come up with our own terms. The other one is to partner with someone on the ground here that's got a credit score and some experience and that kind of thing. And I can partner with them, bring a bit of capital and knowledge to the equation, and then, everyone wins.
Any other thoughts on U.S. real estate investing and all the opportunity here and how that's just so much better than really just about the rest of the entire world offers?
There's so many opportunities here. If you live in the US, you don't realize what an opportunity you have in your backyard to buy real estate. We were talking about this the other day. It's so cool that you can have a bank pretty much buy sort of 90% of real estate for you and you just put down 10%, sort of thing like that. The bank's basically buying the property for you. You just come to the table with a business plan, a little bit of money or skin in the game, and off you go. So the US is a big country. There's a lot of little markets, a lot of sub-markets, and you can have like a nice variety in your portfolio as well. If you want a bit of appreciation, or if you want less cash flow and more appreciation, or you want really high cash flow and maybe no appreciation, you can find all those markets or things that sort of suit you. And yeah, like you talked about in the Midwest, South, you've got pretty nice, steady cash flow, single family homes, which also a nice liquid asset. If you need to exit and sell, there's always someone there usually to pick it up. So it's a nice investment.
Yeah, that's right. So you have kind of this international wherewithal. Where do you like to invest the most and why?
I guess just to give you a quick overview, it's obviously the US. The number one point is cash flow. You can get cash flow here. Number two, I guess it's like the world's number one economy. I see it being the world's number one economy for a long time. I think with California, Silicon Valley, technology, I think even though a lot of jobs have been exported to China, I still think the US is so far ahead in terms of technology that a lot of that productivity can be brought back and leveraged. I think number three would be probably the language. It's an English-speaking country, and I don't think a lot of people appreciate the advantage they have that they can speak English. A couple of months ago when I was looking at that deal in Japan, like I was on the ground looking to do a deal, and just I can speak Japanese. However, those fine legal points when you're looking at a contract, you do give up like a degree of control when you can't fully understand everything. So I think if you can speak English, you have a great opportunity and you should use it. You know, for a lot of Japanese people, that's not easy to actually go out of Japan, go to the US and invest in the US. It's just not something they can do. So a lot of people now are asking me, okay, I want to invest with you in the US. That's an interesting thing. If you speak English, you know, it's a skill you probably didn't know you had. You know, number four would be the tax breaks, the way things are structured in the US and how the government really promotes you to own real estate and provide housing, like affordable housing for people. There's a good benefit. The population is increasing in the US as opposed to other countries, like I mentioned before, Japan isn't. And yeah, the rules, laws, regulations are very similar to Australia, which I'm comfortable and familiar with. So I guess those are the reasons why I choose the US to invest in.
You know, I've found it so interesting talking investing to you since meeting you a few years ago. And, you know, I think one of the reasons I relate to you so well, Marcus, is because you're one of the few people that truly, and you show this, you value your time more than your money. You truly have an abundance mindset. And I think most people with more of a scarcity mindset or a fixed mindset or a linear mindset kind of value their money more than their time. And that shows in their actions. So just talk a little bit more about how you value your time more than your money.
Yeah, definitely. I try and use every minute of the day. I mean, having just free time, like Robert said on your show before, I mean, a lot of people don't have the time to get rich. They're so busy they can't get rich.
Right.
When you free up your time to think and study and strategize, you can get such a great return on your time if you use it well. I think the average person will go home, watch TV for 8 hours a day, and then they're just not smart with their time. They're always chasing the dollar instead of having the dollars chase them, which is what, you know, you always talk about with having money follow you. And yeah, even like we talked about the other days, just having that free time. If I've got a big decision to make, I can spend a day, 2, 3 days just tossing it over in my mind just to make sure it's the right decision. Whereas most people will probably come home from a job and they're trying to think how to they've got a really big decision to make, but they're tired. So those big decisions come last. And I think that's how you use your time effectively as well.
Yeah, it's kind of interesting. You know, people that value their time more than their money and they think about that allocation of time actually have more money, even though they're putting more thought into how they allocate their time.
Yeah, and time's a finite resource, right? Like every minute of the day, it's just ticking away. We're getting less and less of it. And with money, I mean, it's infinite. You can make as much money as you want. The upside is unlimited, whereas time, it's very limited. So there's actually a lot of value in time if you sit down and take a look around once in a while to see how much you've got, you can, I think, get so much further ahead.
Yeah, time is that one irreplaceable, irreplenishable resource. In fact, you and I both have less time left in our lives than we began talking here on our chat a few minutes ago.
That's true, but I think we've used our time wisely.
Well said. Well, yeah, a lot of our time has been spent having these chats while you, I, and our business developer, John Collins, are out on the trail. We like to call that our vertical boardroom. We're kind of doing these steep mountain hikes in the Chugach Mountains here while we're having some of these great chats. So, yeah, it's really been great to have you on the show for a little bit, Marcus, and get your perspective. So thanks so much for coming on for a while today.
Yeah, thanks very much for having me.
Well, yeah, great to finally have Marcus on, an active real estate investor with boots on the ground in multiple world nations. If P.O.O.R stands for passing over opportunity repeatedly, my good friend Marcus is then one of the least poor people that I know. You've got to know what's going on globally to be sure that you're doing the right thing. Okay, this show is called Get Rich Education. The words real estate aren't anywhere in that name, Get Rich Education. I've chosen a real estate focus because over time, it is your most proven wealth creator. I don't have a perpetual real estate agenda. That's because, sure, it's largely a real estate investing show, but ultimately real estate is just a vehicle because it's about that vehicle's outcome, which is your life improvement so that you can live better and give better. Real estate is the most validated vehicle to create change in your life with passive income to ultimately give you what you want in life, which is peace, joy, happiness, love, and freedom. Thanks to our own business developer, Marcus Whelan, today. If you want to look at exact addresses of hand-selected cash-flowing property and get wealth-building ideas that you've never thought of before, just subscribe to our free newsletter at getricheducation.com. It doesn't get much easier than that. I'll be back next week with one singular mission, that is giving you ideas, motivation, and concrete action plans to help you build your wealth. I'm your host, Keith Weinhold. Thanks so much. It was great to have you here. Please tell a friend about the show. Until next week, you might quit your day job, but don't quit your daydream.
You've been listening to Get Rich Education, telling you what the wealthy won't tell you about real estate and investing. If you enjoyed the show, please take a minute to visit iTunes and leave your comments.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.